Hello, everyone. So let's look at task C and the assessment of competence on task C. So if we look at this particular response, the candidate starts off with salutations in relation to Bridget, who was the CEO, and the email was addressed to the CEO. The request was basically to cover three things: high level, the legal requirement as per the Companies Act, as it has to do with distributions. And then secondly, any key issues or, ethical, concerns or governance concerns that one would need to consider as a result of this transaction that we are dealing with. So we would firstly like to assess whether all the three aspects of the task as required by Bridget was addressed in relation to the response, before we go into the details of what the response actually entails. So if we look at this candidate, they do address all three aspects of the task, which is the Companies Act requirements or the legal requirements, aspect number one. Then aspect number two would be the key issues that are there, and you would see that's the section where they deal with key issues. Then the last aspect would be governance. So all three aspects of the task then have been met. Then if we look into the details of the high-level legal requirements, one would need to assess if the candidate is demonstrating understanding of those legal requirements and what it would take for a company to be able to make a distribution whilst abiding by all the rules and regulations that are set in place. So if we look at the Companies Act, firstly, it defines, the candidate says the share buybacks are included in the Companies Act definition of distribution, which is true. As such, a share buyback would be subject to the following requirements. Firstly, as per Section 46 of the Companies Act, the share buyback would need to be authorized by the Board of Directors through a resolution. So that first part is correct. For any distribution to be made, it would need to be authorized through a resolution. And then the candidate actually goes a step further because they realize that in this particular share buyback, the shares that would be bought back would be more than 5% of the shares that are currently being held. And as a result of that, Section 115 kicks in, where to approve the buying back of shares that are more than 5% of what is currently in issue, that buyback would need to be authorized by way of a special resolution. And this special resolution would need to then be processed by the shareholders. But remember, we're not looking for perfection. At this stage, the candidate was able to identify and apply from the scenario the fact that they're going to be buying back shares worth of 30 million, and that then constitutes more than 5% of the shares of OT, which is on time. And as a result of that, then there's a special resolution that kicks in. So this is good understanding on the resolution and basically the types of resolutions that would be needed. It would be a board resolution, and then it would be a special resolution. Then further, the memorandum would need to be considered in terms of what conditions are in the memorandum, and if there is anything specific or additional requirements that would be met, OT would need to go back to the memorandum. So the advice, again, around the memorandum of incorporation needing to be considered as part of meeting the legal requirements is valid and correct. So the candidate is showing good understanding of the legal requirements as it relates to the distribution. Then further, then the candidate recognizes that the distribution would only be authorized if the board has acknowledged that the solvency and liquidity test would be met. So now, in terms of giving advice, the candidate would need to go and show application in terms of their assessment on whether or not solvency and liquidity would need to be met or would be met by OT before this distribution. So then the first thing that the candidate mentions is the fact that the solvency and liquidity test is detailed in Section 4, and it requires, firstly, that fair value of the assets must exceed fair value of the liabilities immediately after the distribution. Then the test also requires that OT must be able to pay their debts as and when they fall due within 12 months after the proposed distribution. And then the candidate says, this should be carefully considered, especially as there is a new lease in the next financial year with large payments within the next 12 months. So in the first part, the candidate talks about the net asset value, which is the fair value of the assets exceeding the liabilities. But at this stage, we haven't seen any application as yet. Then secondly, the candidate says, well, the liquidity would also need to be considered. But then at least they go a step further to say, in assessing the liquidity, the lease payments would need to be factored in, because there will be a new lease and it will be large payments within the next 12 months. So we need to really assess if OT is liquid. It is not the best application of solvency and liquidity. Because if you look at the solvency part, the candidate could have then gone and used the information that was given in the pre-release to assess the solvency position of OT. It wouldn't be perfect because there wasn't enough information about the fair value of the assets or the fair value of the liabilities. However, the candidate could have used the current net asset value as a starting point, and then acknowledged in that discussion that the fair value would need to be taken into account. And when we look at the fair value of those line items, then, consideration in relation to the impact of fair value on deferred tax would need to come in. Deferred tax assets or deferred tax liabilities. The consideration would need to come in relation to the fair value of each and every one of those assets that OT has, so that we can convert them from the current figures that are being shown to the fair value, because the solvency test requires the fair value of assets to exceed the fair value of their liabilities. So the application of solvency and liquidity is not the best. There is a little bit of application, but we wouldn't give credit for application of solvency and liquidity because the candidate could have done better. And as it relates to liquidity, the candidate could have actually gone a step further to discuss, for example, that a cash flow projection would need to be done. And that cash flow projection would need to be assessed, So all of those could have come in, and that's where then they could have nicely linked the fact that because there's a new lease and the cash outflows, the large payments that are going to be made due to the lease would also have to impact the cash flow analysis, and that cash flow analysis would be able to, give insight on whether or not the liquidity position of OT will be able to handle the distribution. Then the candidate talks about if the solvency and liquidity is not met, that would be considered as reckless trading. Remember, reckless trading requires other indicators to be met. So not only do we look at the solvency and liquidity in concluding relating to reckless trading, section 22, but there's also that intent to defraud or intent to not be fair in dealings that would need to be shown on behalf of OT and the executives and the directors, and only then would we be able to validly consider section 22. So as it stands, we can't conclude that there's reckless trading simply because solvency and liquidity test is not met. There needs to be more. If you go to the requirements of section 22, you'll see there needs to be more, especially an indicator of the intention to defraud suppliers, to defraud, other stakeholders. And in this case, there was not enough information relating to the intent to defraud. So section 22 is not valid. It's not a valid consideration. Then if we look at section 75, the candidate says, as per section 75, directors are required to disclose any conflict of interest or personal financial interest in the matter. Therefore, you and Sigal would have to disclose to the board that the loan has been received from FRB. Now, it's important because you cannot only state the Companies Act requirements, there needs to be application in relation to that particular section that's being discussed. So in this case, application was really brought through by the candidate in their response, because they then identify that Tigal and Bridget would have a conflict here because of the shares that they hold and the loan that they have from FRB. And then from there, they have correctly advised that this personal interest or conflict of interest must be disclosed to the rest of the board of directors. But not only disclosed, as they mention here, after disclosure, the directors would then need to recuse themselves by leaving the meeting and not partaking in the discussions that are there. So what becomes important from Section 75 point of view is the principle of disclosure and not forming part of the discussion. So the candidate has shown both of those. So then we can say, yes, there's good understanding of Section 75 as it relates to conflict of interest or personal financial interest in a matter that is being discussed by board of directors. Then the candidate further states Section 76, which then requires the directors to act in the best interest of the company, and they have the fiduciary duty to do so. So if we read this particular sentence, there is no application. All that the candidate has said is the fact that Section 76 requires directors to act in the best interest. So they didn't then go further to discuss whether or not the directors are acting in best interest. And if they're not acting in the best interest, why do they think so? So here there's just some theory dump and there's no application that came through. Then they talk about non-compliance by a director to the above mentioned will result in application of Section 77, which hold directors accountable in their personal capacity. Okay, so that's what Section 77 says. Section 77 is there as a consequence of actions that directors would have taken, and then it holds them accountable. So then that would be the theory, but what's the application? The application then becomes you will be held accountable in your personal capacity if you make the decision to distribute contrary to Section 46, i.e. Contrary to the board resolutions or the special resolutions and or the solvency and liquidity. So the candidate didn't just say, well, Section 77 will kick in. They've said Section 77 will kick in if the decision to distribute is made even though there is no board resolution or special resolution or solvency and liquidity test is not met. So there is that application to Section 77. So we are happy to award a valid credit basically for the discussion of Section 77. Then they go further to say, in addition, should Section 75 not be adhered to, decisions taken in contravention of Section 75 could be considered void. So again, there's that application because Section 77 not only holds directors personally liable in their own capacity in terms of having to make payments back to the company, but also if there are decisions that are taken and proper procedure was not followed, then those type of decisions might be regarded as null and void. So if we look at the application that the candidate has brought through as it relates to Section 77 and the implications that could exist on behalf of the directors of OT, this candidate has actually told Bridget that, if this decision is made, you as directors would be held liable in your personal capacity, meaning that you would need to make any payments in terms of Section 77. And in addition, you if you take the decision without adhering to Section 75, i.e. not disclosing your interest in the matter, then the decision that you've taken might be regarded as void. And there's good application in that light. So if we look at everything that they've told us under the legal requirements, we are happy that they have created awareness to Bridget by advising Bridget that there would need to be a board resolution and that there would need to be a special resolution. So they've advised Bridget to look into passing a board resolution and a special resolution. Then they advised Bridget to look into the memorandum of incorporation to see if there's anything that prohibits the distribution. Then they also created awareness to Bridget to say there needs to be a solvency and liquidity that has been met. But unfortunately, they didn't apply to give Bridget that further guidance to say what would constitute meeting the solvency and what would constitute meeting the liquidity for the purpose of OT. So we're not looking for the theory, but we're looking for application to say, what's the solvency status of OT and what's the liquidity status of OT for the purpose of this distribution. So there's no credit for solvency and liquidity. However, there's no credit also for Section 22 of reckless trading as explained. But we do give candidates, credit for good discussion and applicable discussion on Section 75 of the Companies Act. So Section 75 was not only a theory dump, but there is application because you can see the candidate is linking it to Bridget and Sigel and also what they would need to do. Then Section 76, there was no credit because the candidate just theory dumped there. But as it relates to Section 77, the candidate has also shown good understanding. So, I mean, if you look at this and you take a step back, the candidate has shown understanding of various aspects as it relates to the legal side of making a distribution. So yes, it's not perfect. Yes, their solvency and liquidity could have been improved. Yes, they could have then applied Section 76 in much more detail, which they didn't do. But overall, taking a stand back, no, this candidate does really have good understanding of the legal requirements that would need to be there. And they have applied, the majority of the theory that they've provided to the information that was given to them as it relates to OT. So if we look at the Companies Act, then, we are happy with that discussion that has been provided. Then if we look at the key issues that are here, the key issues that they have then, provided is in relation to the following aspects. If we read what they've said, they say the key issue in order to decide on whether a share buyback or a distribution should be made, for that matter, would be acting in the best interest of OT as well as stakeholders of the company, or would it be just beneficial? So say the key issue is to decide whether the proposed share buyback or distribution would be acting in the best interest of OT or as well as the stakeholders of the company, such as customers and employees, or if it will only be beneficial to the shareholders. So this candidate is then saying to the board of directors, before you continue, what you need to consider is if this decision is just good for shareholders or if it's good for stakeholders as a whole. So they are basically trying and attempting to discuss a stakeholder inclusive approach. But if we look at what they've said, they haven't actually applied. All that they've done is to say to Bridget, well, you need to consider if it's going to be good for shareholders only, or if it's going to be good for other stakeholders. They needed to apply that principle to the information that has been given to them. So they needed to then, be a bit clear to Bridget to say, why would it be only beneficial to shareholders and not yet beneficial to other stakeholders? And they don't get into that in this discussion, unfortunately. Then we look at the following paragraph where they say, given that OT is recently established and has been in loss making for the prior 2 years, the board needs to consider if it is an appropriate time to have a distribution. So they're saying, okay, the company is fairly new and they've been making losses in the prior 2 years. Is it the correct time to actually make the distribution? So here there is application because they're identifying that the OT has been loss-making and they're identifying that it's still in its early stages. So then they say this is the first financial year where OT is being profitable. Given the early stages of the life cycle of the business, the nature of its operations being dependent on high and volatile fixed costs such as fuel, it may not be seen as better for the company nor acting in that best interest of the company. So here they then, try to apply what would be of the best interest of the company. And in this case, they're saying it's early, you've made losses, you're only profitable in the current year. The nature of your operations is dependent on high and volatile fixed costs such as fuel. Therefore, it is not in the best interest of the company to make the distribution. So there they give the key issues that are coming through to say, this is what you would need to consider before you go ahead with this distribution. And there is good application to the operations of OT. So you can see they've identified the current position of OT in terms of it being a new company, loss-making, only profitable for 1 year, and there's high and fixed volatile costs such as fuel, so that the application is really perfect in relation to what would be of best interests to the company. Then further, they say the transactions of this nature are usually done by companies with high cash reserves and no potential investment opportunities. Then they link it to OT to say this is not the case for OT, because firstly, OT does not have any high cash reserves. They've been making losses in the prior year. And they have identified an opportunity for expansion, which was the George route. Therefore, it would be better to retain cash and engage in the development plans and expansion, such as the George route. So there is good application because you can see that the candidate is bringing in the George route as part of the discussion. Unlike where someone can simply just say, well, we need to consider growth or we need to consider investment opportunities. What investment opportunities can you link that particular key issue to? It must be linked to something that is appropriate and relevant for OT as a company. And in this case, bringing in the George route really shows application to the case study, application to OT as a company in which you are responding. Okay, then the last two paragraphs under key issues, it says, in essence, retention and reinvestment would be maybe actually enable OT to even be more profitable in the future. The board should consider whether the short-term gain of the distribution is worth sacrificing a potential long gain that may be greater in value for OT if they have the opportunity to retain cash and grow. So they emphasizing the importance again of not making a distribution, but retaining it for the purpose of growth. And we are happy with the application of this because then they've linked it back to their George route. The shareholders also need to consider the effect of their current percentage holdings if 30% of the shares are being bought back and the possible loss of significant influence on for some shareholders. So again, in terms of how this distribution would need to be made and what is the impact on shareholders, that is also a valid consideration. However, the candidate could have gone further to ask the board of directors, how are you going to actually buy back these shares? Is it going to be targeted to specific shareholders? Is it going to be, a blanket share buyback that needs to be apportioned amongst all shareholders? Because if it's apportioned amongst shareholders, then it affects, some of these shareholders that are there and potentially the number of shares that they were holding, and whether or not there will be significant influence on that shareholding for those shareholders. So they could have worded it better, but there is that key issue in terms of how is this share buyback going to happen and what's the impact on other shareholders. Then if you look at governance, remember governance is all the principles that are coming through, from King, but not only King. There are other sections that are relevant for governance purposes that are sitting under the Companies Act. So in this case, we were not strict. If you addressed Companies Act in the first part or in the first aspect of the required, that could also be seen as addressing governance for the third aspect of the required. So there was cross marking between these sections that are there. So in this case, what is the candidate saying under governance? Firstly, they're identifying the principles, and this is where application becomes important because sometimes we end up stating the principles without applying them. So we needed to see good application to the case study, to the facts and circumstances of OT before one could get credit for what they have put down as part of their response. So if we then look at this, what is the candidate saying? They're saying, as per the recommended principles of King, the governing body should lead ethically and effectively. This includes acting with integrity and in the best interest of the organization. Okay, that's just theory so far. The governing body should avoid conflicts of interest, and if they cannot be avoided, they should be disclosed. Again, it's theory. The governing body should act ethically beyond mere legal compliance and is responsible for setting the tone and culture of the organization. Okay, so you still haven't explained any of these principles. You are stating principles as coming through from King and some of them from the Companies Act. But then at least here they try to get into some application. Let's see if it is correctly discussed. It says, as discussed above, given the financial position of OT, a proposed dividend of this nature may not be acting in the best interest of OT. Okay, so they're trying to apply best interest, but we've already, given credit for best interest. They can't talk about the same principle over and over again. So at this stage, we can't give credit for anything because it's a repetition of what they've given us. They also acknowledge that it's repetition because they say, as discussed above. So there was no need to repeat that. They could have tried to apply other principles as it relates to King or as it relates to governance. Then they say the loan received is recommended to be disclosed. Again, it's a repeat of what they've already told us under Section 75 if we go above to the first aspect of this particular required. And then they say the governing body should ensure the tone they have set is recommending or is in line with what King recommends. Again, there is no application here because the candidate could have then said, taking a step back, it appears as if Bridget and Sage, who is the CEO and the CFO, are prioritizing their own, personal gain over this particular matter. What tone does that set as it relates to the rest of the employees within the company? They could have questioned the tone coming through from different aspects of the information that has been given to them. They could have then acknowledged that, they are executives, they are the directors of the company, therefore they are prioritizing them paying back the loans to FRB, and that doesn't set a good tone because it might just lead to unethical behavior by employees who are then also in a position to make decisions that could not benefit for the company but would benefit them personally. And because the Bridget and Sigal have already done that, then it can also impact other employees or promote employees or give employees an incentive of opportunity, or set the tone where they would also think doing this for personal gain at the cost of OT is well accepted within the company, which is something that we don't want. So there, the application on tone was really not apparent. Then they say King also recommends that they have sufficient knowledge and rules, as such being aware of the Companies Act. Consequences should a solvency and liquidity fail the distribution. Again, there is no application there. They say sufficient knowledge and rules should be applied, but what is it that's making you think that the governing body does not have sufficient knowledge and competence as it relates to making this distribution? There could have been other information that is given to you in the scenario to indicate that there's no sufficient knowledge and skills, but here there wasn't nothing. The CEO just asked for your advice, right? So that's something maybe that is a bit far-fetched in terms of knowledge and standards here, because there wasn't strong indicators of otherwise, or of the governing board or board of directors not having the knowledge, especially because the board consists of other people as yet. The board has not yet taken the decision. You see, if the board had taken the decision and it was going against Section 46, then you can come back and say, well, the governing body does not seem to have sufficient knowledge and skills, but this is not the case. Then they say one of those, members of the board, which is RIFSA, also has a responsibility under King to best act in the best interest of stakeholders in general, but that's not being applied. Yes, they have the responsibility. What makes you think that they're not acting in the best interest? And here, if you go back to the case study in the information, RIFSA was basically advocating more for their own directors, and their own directors, being in a position where they desperately need to get, some sort of a distribution, and that they would really appreciate it that, conditions or trading conditions have been tough for RIFSA. Therefore, RIFSA would really appreciate if OT gives them something. So there's no application of that. You needed to go further. The candidate needed to go further to say, actually, there is indication that RIFSA is not acting in the best interest of OT because they are promoting their own personal, stance or gain from this particular distribution, not considering really the fact that if you're sitting on the board of OT, you should then, be putting the priorities and the interests of OT first before you look into the priorities of another company. Okay, then the governing body is also responsible for overall strategy and direction of the company. Therefore, it could be seen as not the recommended strategic move to have distribution, but to rather use the profit for expansion of the route. So this is also not technically, correctly discussed, because if we look at overall strategy and direction of the company, then this has to go back to how the governing body sets their overall strategic policies for the company, because it's those policies that would give direction for OT on how to act and how not to act. So the candidate could have actually linked it better, for example, to let's say a policy around when OT would be in a good position to make distributions as it relates to dividends. So then they will say, okay, maybe the governing body needed to, in the first place, when they were setting up their strategic direction of the company, have a policy that sets out when discussions around distributions would be appropriate and in the correct time for OT, because every company is different and they can really choose to have distributions in different phases. So having a policy that's fixed, that's set, really avoids ad hoc discussions around distribution. So then the policy would say distributions by OT would only be made in year 6 of the company operating. Distributions for OT would only be made if there is, an X amount of reserves in place. So they needed to be that policy. That's what the principle in King sets to achieve. When the principle says the governing body is responsible for overall strategy and direction, it means where are those strategic considerations and policies that should direct the company's do's and don'ts. And therefore, the application here was not appropriate, unfortunately. Then they conclude to say, overall, it is recommended that a stakeholder is treated fairly and stakeholder-inclusive approach is adopted. That's theory, no application. Do they give application of stakeholder-inclusive? Let's see. They say, therefore, the governing body should be cautious of being seen as not acting within the best interest or needs, and rather for their own personal gain. Okay, what makes you say they're not acting in the best interest of stakeholders? We need a bit of application. Then they get there by saying, currently the decision is mainly driven by personal gain of shareholders. No consideration is seen to be given on how this would impact employees and ensuring that there is sufficient cash retained for salaries and other related costs. So this is good application, because the candidate did not just say we need to consider stakeholder inclusive. They went and applied to show how stakeholder inclusive and a stakeholder inclusive approach could be demonstrated. And they say, okay, in this case, a stakeholder inclusive approach does not only benefit shareholders, but it benefits other stakeholders. And they were specific in which stakeholders they were talking about. In this case, they're talking about employees and ensuring that there's enough cash retained by the company to pay salaries and other related costs. So it is a good example of how one would need to apply the stakeholder inclusive principle. You need to identify which stakeholder. You need to explain how that stakeholder could be impacted by the decision that has been made, and that is what the candidate has actually done. So that is very good application. So if we look overall, governance was not convincing. Hey, it was not convincing, but if we take a step back they were able to actually appropriately then discuss the stakeholder inclusive approach in relation to this. And remember, we're not looking for perfection. So just having that stakeholder inclusive approach really does show understanding of governance, especially because there is that interlink that could exist as well from a company's perspective in terms of what else could constitute as governance in relation to other sections that could be here. So if we look, we take a step back, the candidate has shown some understanding of governance. The candidate has shown good understanding of key issues. I mean, they've told us about the loss-making position. They've told us about the cycle of OT and being a fairly new company. They've then told us about the high and volatile fixed costs that are there for the nature of OT as a company. And they've actually given an example to say fuel is one of those that is very volatile. So the company would need to prioritize being able to meet its high and fixed costs. Then they tell us about the George route and expansion. So there is key issues that are good that the candidate has really addressed. And then as discussed, the company's actual legal requirements was also sufficient. So yes, not perfect. There is a lot of theory dumped here and there, but overall, they were able to show application in some aspects of the principles. And that then has made this candidate, competent overall. Okay. So that is competence in this particular stage.